Hello, folks, and welcome to my pre-market analysis. And yeah, of course, you pardon the the theme. I kind of like changed it. I've been using that one for years, and I felt like I started using this, the traditional trading view theme, and I really liked it, so I decided to do the settings on my own. Um, in the commentary, I made mention of the fact that I wasn't looking at gold because I actually looked at it during the weekend, but I needed the markets to open, and as soon as the markets opened, I just knew that I should just wait a little bit for more data before I can you know talk about gold and stuff. So based off of last week's closing, this was last week's trading, we closed very bullish on gold. So that in itself is a weekly indication that this week is likely bullish and we are going to have a bullish close this week on gold. So that being said, before we go to the daily time frame, we have 2980 and 3020 as our new buy side objectives. Okay. But I think majority of the details is going to be on the daily chart. Okay. And why it's on the daily chart is because if, for example, we had a very strong bearish bullish close last week, and Monday's trading was bullish. Okay, what Monday's trading just means is that the market is beginning to expand in the direction of higher time frame bias. Okay, and we had that for Monday, and we also had the early portion of Tuesday. I think the overnight trading on Tuesday was bullish on gold, right? And of course, it met some kind of objective. I think close to 2950, but we didn't get 2950. Yeah, 2942.80 ish. You get. So when that objective was hit, because I had some line, some level there, I casted forward, and I knew that was like some buy side objective. Okay, so I just waited yesterday, and if you look at today's trading, okay, so this is the detail. If Monday was bullish, and Monday being bullish just tells us that gold is expanding in the direction of higher time frame bias. Okay, and mind you, we have a daily bullish order block, and this is Tuesday's trading. Tuesday's trading literally just retraced back inside Monday's range. Okay, and when you see this kind of thing, obviously you understand that the early portion of Tuesday is unlikely to just continue on gold, and that's why you really need the daily time frame, because the daily time frame just gives the validation and all of that. Okay, and and at the close of today's trading, you can see the market traded below Tuesday's low. Okay, inside Monday's range, and traded into this daily bullish order block. Okay, and gold is bullish. Obviously, I don't need to say too much on gold, trying to convince someone that gold is bullish. That'll be very hilarious to do. Okay, so we have a bullish close today, Wednesday, and the anticipation is for Thursday's trading to expand in the direction of Monday's bias, because Monday already established the weekly bias. Tuesday returned back into Monday's range, and Wednesday just is giving a continuation that we're going to return walk inside of Tuesday's range. Most likely we trade into Tuesday's high. Now mind you, we have objectives we are looking out for, like the 2980. Okay, it's buy side objective on gold, and you want to know how I just figure how I came about 2980. So this is a retracement from this high to this low, so you can just take from this low to this high. Okay, so the minus 50, so half standard deviation is 2980. Basically, it's just the standard deviation. There's nothing too complicated about it, but it's just how you place the retracement, the extension. Okay, since it's bullish, we are looking for price objectives in the future. So I'm going to take my fib from the low of the retracement to the high of the retracement. Okay, so the daily time frame is signaling bullish on gold, so we just go into lower time frame chart. Okay, first on the 4-hour chart, and on the 4-hour time frame, yeah, what we have here clearly is, we have, this candle here, this down candle that traded into the daily order block, okay, that ran liquidity here. So, we're likely to see, gold just return into this order block here. So this order block, the high, so we have the fair value gap here. So we have this candles range, that's this prior 4 candles range. Okay, we have that. So we can need to frame like a low for like a turtle soup, but this 4 order block, because we have long wicks, so they're likely to return, close up this gap completely, and probably come to the body spot. Honestly, the close of this gap into this OB, I mean this last down candle here, the high, I think that's fine. That's really fine. So yeah, just basically that is straightforward as you'd want to expect a market that's predisposed to run high. Okay, we have the high of this OB, and we have our objective here, and that's about 865 pips, 865 pips. But if you factor in the risk here, the risk is a lot. Okay, so I think most people do always want to subject themselves to intraday setups, and which is what I'm likely going to do. Okay, just wait for the appropriate time of day. But I'm going to probably watch gold for a while tonight. I mean, I'm just going to watch for a while. But we have this 4-hour gap, and that's also overlapping with the 2-hour fair value gap. Okay, we have this 2-hour fair value gap. You see this 2-hour fair value gap. Okay, we have the 2-hour fair value gap. So yeah, I'm just gonna put an alert here, and so we have the 2-hour gap, the 4-hour bullish order block, and we have our objective in time, that's 29.80. Okay, pretty straightforward. That's why I had to wait for the daily time frame to close to validate bias. Monday, like I said, Monday was bullish on gold, and yesterday returned back in the range, and after that consolidated with yesterday's close. Very unlikely that we see a continuation early today. So, and we had a run below yesterday's low. You can see the rejection here. Okay, look at the rejection. Okay, you can see the rejection there, and we have this fair value gap. So we have a turtle soup, a potential reaccumulation to discount. Where's discount? The 4 bullish order block, that last down candle that ran liquidity here, market likely to return there. Okay, possibly completely closing this 12 fair value gap. That's a very strong possibility. Okay, and if we go down to more lower time frame, I think we have levels here. Markets could potentially run like here, potentially take out sell side here. If I put on my rectangle tool here, okay, for the 12 gap, and go to the 30 minutes time frame. Okay, so you can see here on the 30 minutes chart, if we're likely to completely close the 12 fair value gap, you can see we're going to run liquidity here. Okay, that's something you want to note. So basically, and that's why I'm going to factor in time. Okay, time of day, very important. Okay, very important. Time of day. So if we see a run on liquidity around here, and we are about London session 3 a.m. London, that's perfect time of day after probably an order block forms or a market shift. I don't know how you get in your entry technique, but for me, I want to see that run on opposing liquidity at that time of day. We have a breaker here. You can see the breaker here, and we have a breaker here, and the breaker hasn't been retested. We have a breaker here, so we have lots of PD arrays overlapping here. And what if the markets don't return here? Well, like I said, you need time to manage your expectations. You can only use time to manage your expectations. Okay, and if that doesn't happen, and probably we'll see markets expanding. Definitely, I'm not going to be trading a London session if markets continue expanding overnight. Okay, and so long we've not met objective here prior to New York session. So at New York, any return back into range or something, I'm going to utilize that. But for now, we have this 4-hour down candle, this auto block here, this fair value gap, the expectations for markets to return here at the right time of day, and we're going to look for longs on gold. And like I said, objective 2980. Okay, that's buy side objective on gold. So earlier this week on Monday, I was talking about US oil, and I went through the high time frame, 6 months, 3 months, monthly chart, and when we go to the weekly time frame, I was talking about how markets are likely to return to the low of this weekly candle. Okay, and that's something you want to note, because when you're managing expectations, you set you don't set the bar too high. Just set something, the low hanging objective. Okay, low hanging priorities for the market, because I cannot say the market is going to completely run through this week, because this week you want to interpret it as a gap. Okay, I cannot say that, because you can see the expansion from this candle. So there isn't so much, I could say, except if we say the market has returned into a discount because they trade into this auto block. But mind you, markets already walked this fair value gap here. You can see the rejection. They walked this fair value gap and rejected to take out previous week's high. So after a close like this, my expectations for the markets to continue with this strength, aggressive, run lower. But then you can see the markets run inside this week and completely traded through this week into the close of this candle, and it's very, very permissible, because we are at discount for the fact that we have discount PD arrays here, like the weekly bullish auto block and stuff. So if you're making, possibly someone's watching this and they want to start making commentaries online, you'd notice that I always look for easy target, because that's how you stay nimble. Okay, and that's the reason why I said you need the daily time frame in this case here to validate buys. Okay, like in this case, Monday was bullish. Monday was bullish, so obviously I cannot go on US oil on Tuesday looking for bearish prices, especially for the fact that we just hit this daily order block, the propulsion block. Okay, so I needed to be sure if we're going to find resistance here or not, and we did it. In fact, the market's going to run through into this level here. We're going to check in lower time frame. And earlier today, I think I was in a live session and I was talking about how I wanted to see how CPI would give me something. Although that didn't happen, but we are still going to study prices intraday under the narrative, because I want to show you what my model intraday looks like. I think I did it one time, and I want to show you just how precise it is. Okay, so but on the daily chart now, on US oil, we have this old fair value gap. Okay, and now that markets is beginning to establish order flow, which is bearish. Okay, we already have a down day, so old levels of support, because if we weren't under a bias, or if the market weren't bearish, this should have naturally just given off as a support level, and market could potentially reach for these highs that someone would see as relatively equal highs and stuff. You get, so we have an old fair value gap, an old bullish fair value gap, and now this fair value gap is going to serve as support, resistance, support, whatever, depends. You can say support for lower prices, you can say just whatever, really. Okay, this one's fine. Let me increase this. All right, so we have an inversion fair value gap here, and the expectation now is for the markets to return here at key time of day. Okay, it's very, very important. I keep saying at key time of day. I mean, that's become my theme these days. Okay, so I want to see markets at key levels at key time of day, so that when we have a market structure shift in line with that, we can interpret that as sponsorship, okay, not manipulation or whatever, because now time is overlapping price. So this is the level I'm going to be watching during the London session, or possibly probably they trade into here overnight and stuff. But once I begin to see like a market structure shift at that time of day, then I know it's, you know, it's something I should consider really. I should really consider it. Okay. So we have that already. So let's see the 4-hour chart, because I mean we've gone through all like that. It's pretty easy. Markets return into the range. I think this was the previous weekly low. Yes, with the low we're talking about that we wanted to see market draw into, and they ran above buy side here, and you know there's still upside momentum. Imagine you've seen this green candles on the 4-hour time frame. You can see the bodies of this candle closing above this candle's high. This is not a bearish signal after taking buy side here. This is still bullish, okay, and you know they just ran through overnight and stuff like that. So yeah, the trade into premium market on Tuesday, trade into premium Tuesday, and we began to see breakdown today. So we have the daily fair value gap. That's the daily inversion fair value gap. We have that, and let's see how way overlaps on the far. So on the 4-hour chart, we have, you know, we have this daily and we have this 4-hour gap, and if we can split the daily gap into two, you can see the midpoint of this gap is overlapping, you know, this upper fair value gap on the 4-hour chart. Now, mind you, for a very bearish US oil, we want to see them stay below, you know, the consequent encroachment of this daily gap. Once they begin poking around and stuff like that, it becomes something else. Likely because now we are discount. If you measure from low here to the high, we're discount, and they could possibly just utilize, you know, any of these PD areas here to just probably return into the range, consolidate, and allow, you know, Friday to just deliver the rest of the weekly range. Okay, so that's why you want to be careful. But then since the daily time frame has given us a level of resistance here, and you know we have levels on the 4-hour time frame overlapping the daily level, and of course when markets trade at key time of day and we find those setups, those setups should be considered really. Okay, so for today's trading, I mean, very beautiful price action on US oil. I really envied the price action here. Where's the opening price? Okay, this is the opening price, and that's one of the reasons why, you know, you really can't, you know, for me, I don't know about you, for me, I really can't trade if I don't have any bias. Okay, and doesn't mean there are periods when I don't actually trade but I have bias. Okay, there are periods like that. So this is the midnight opening price, and so text pardon me please. All right, so this is midnight opening price, and if you're bearish, you want to see price run against, you know, the opening price, and the time of day you want to execute really. You want to execute between 3. This is 3. So that's my own kill zone where I look for, you know, my model. Okay, so from 3 to 4, all right, that's when you want to execute, because most of the time it's better you wait till 3, because sometimes, you know, the manipulation waits until 3. You can check GBP JPY or USD JPY, the day before yesterday's trading at Tuesday's trading. you see the daily fair value gap on the daily chart, the draw on liquidity, right, and see what happened around 3 a.m. So sometimes, especially GBP JPY, because we have like multiple lows forming, and that's what you want to note. Okay, so 3 is ideal, and you can see the manipulation here. the market structure shift, the fair value gap. Now this fair value gap is high probability. So you can see the market went into this gap at 3. You can see the time just below. You can just look below. That's 3 a.m. And if you're still looking for setups, okay, you can see that for the New York session, you want to be looking for 8:30. 8:30 is your time of day to 10, because most of the time there's always a Judah swing post 8:30. I didn't know it was so obvious on US oil. Just this evening, I went to church, and I go back, and that's when I saw euro, because I took my trades on euro, and before I went to church and stuff like that. So I came back and I was going through a chat scene, looking for the opportunities really. So you can see 8:30, we have Judah swing here, run through this high. There was a shift in market structure, a fair value gap, and you can see everything is happening within this time window. Okay, this is very important. Okay, and it offered about 100 points, and 100 points is it's a lot for US oil. It's a whole lot. So very beautiful setup, very beautiful setup, and it's something I wish I was participating in this kind of, because these are very easy kind of setups, So apparently on US oil, we have our daily K level, which is this old gap, this bullish fair value gap, now turned bearish. So we want to see the markets return here at key time of day and look for short. Mind you can see we have a swing high from a lower high to the right, a lower high to the left. So we're expecting the market to trade into the previous day's low. Now, it's not just previous day's low this time around, because when markets trade into the previous day's low, probably when they trade into the previous day's low first, they might want to return back into the range, okay? And that's when we have this here. So if markets stay at previous day's low before trading here, mind you, they still have every propensity to reach for this price level. That's why if we have overnight trading, okay, you might want to excuse London, so that you want to see if they are going to return back here or not. And if they're not going to return back here, then New York session from 8:30, you blend market structure and all of that, and see if markets can get below the previous week's low, because the weekly bias is bearish, and our anticipation is for prices to reach for previous week's low. So this is our draw on the Crude. Okay, so our daily time frame target is here. This is where we're eyeballing. Okay, this is what we are eyeballing first, and yeah, so this is what we are eyeballing. I just started putting this one here, and yeah, okay, so we have sell side here, and and gold. So I hope you found this one insightful. On to the next one.